Hey traders, welcome back to my channel. If you're looking at leveling up your trading strategy, today we'll be talking about footprint charts, a tool that'll give you serious edge when reading the market. Unlike traditional charts that show you price movements, footprint charts show the volume of trades at each price level. This gives you insight into the market activity, letting you know where the aggressive buyers and sellers really are in the market. This can help you avoid unnecessary losses or improve your win-to-loss ratio. Okay, so how do we actually use these charts? Inside each footprint chart, you'll see the volume traded at each price level. To understand how a footprint chart works, we first need to understand the auction theory and the relationship between buyers and sellers. Let's look at an example in real estate to explain this theory. If you wanted to sell your house for $450,000 and no lower, an aggressive buyer must meet your offer to have a deal. However, let's say you're in a rush to get rid of this house and a passive buyer offers you $420,000 and you accept this offer. You are now the aggressive seller. So to sum this up, market orders are what move the market as you're coming to meet the passive buyers and sellers at their price point. Let's see what this looks like on the chart. If we have an aggressive seller, it is a market participant that wants to sell at whichever price is on offer in that moment. This would be a market order. Due to this urgency, they have to accept a passive buyer's offer known as the bid. These transactions are shown on the left side of the candle. If we have an aggressive buyer, it is a market participant that wants to buy right away, which again would be a market order. And as a result, they have to accept a passive seller's offer known as the ask. This is shown on the right side of the candle. This is a traditional footprint chart. However, you can represent the data in all types of ways. For example, on a delta footprint chart. I personally prefer to represent the data this way as it's a lot less numbers to interpret. Delta represents the difference between buying volume and selling volume at a specific price level. It indicates which side was more dominant in executing trades at that particular level. In this example, we can see that there's 10 aggressive buy orders that have landed on the ask and 2 aggressive sell orders that have landed on the bid. The difference between these two numbers is positive 8. That's why we can see 8 on the delta footprint chart on the right here. On a footprint chart at the bottom, you'll also have time statistics. These can include volume, delta, and cumulative delta, which I personally use as well. Now we understand what a footprint chart is, we can learn how to use it to benefit our strategies. In this video, I'll be going through 3 components: volume nodes, delta change, and absorption. Let's get into it. We can identify areas of interest by analyzing volume nodes on previous footprint charts. Volume nodes represents price levels where there was a significant amount of trades in that specific area, indicating strong interest from market participants. Most people may know these as order blocks or supply and demand zones. However, volume nodes allow us to have a smaller and more specific area. Also, it can help us identify zones that you may have missed on a traditional candle chart. For example, on large bullish candles. These areas often act as support and resistance levels, and if price returns to this level, it may indicate a trade opportunity. I personally use 30-minute charts to identify my volume nodes, and I have my volume border set at 55%. In this example, I've marked up an area interest based on the volume nodes as discussed earlier. You can see there was a lot of aggressive buy orders visible in the footprint chart. Now, once I've marked up this zone, I'll be expecting price to return to this level. And once it returns to this level, we need to analyze some more information to work out whether it is a trade opportunity. Something that I'll analyze is cumulative delta. Now that we have an area of interest in mind, let's look into cumulative delta. Cumulative delta is a tool to track buying and selling pressure over time. Instead of looking at individual bars, cumulative delta is the difference between aggressive buyers and sellers, showing us who is gaining control or losing it. If I'm looking at a long trade, for example, at a predetermined volume node, as price is approaching this level, I want to see cumulative delta rising. This is also known as a delta divergence. Delta divergences can also be spotted in singular candles. Let's look at this example. You can see on the footprint chart, price is increasing. If we look down the bottom at cumulative delta, we can also see that cumulative delta is also increasing. This can indicate that this bullish trend is going to continue. However, on this chart, you can see price is still rising, but cumulative delta is actually on the decline. This could indicate to us that the bullish sentiment is weakening and we may see a reversal. The final confirmation that I look for in footprint charts is absorption at my predetermined levels. Absorption is a large amount of orders showing up on the footprint chart. However, price is not reacting as you would expect it to in that direction. This can suggest limit orders from large players such as institutional players or market makers are absorbing those aggressive orders, preventing further movement. Absorption can be a strong signal for a reversal or a continuation depending on where it occurs. As you can see in this example of absorption, as price enters into the area, the volume node that I marked up earlier, we can see there's a lot of aggressive sell orders showing up on the footprint chart. However, price seemed to hold above this area. This could indicate that there's a lot of demand in this area and passive orders absorbing those aggressive orders. In this case, it could indicate that we will continue upwards. Please note when looking at absorption, we don't just want to enter when there's negative orders. We also want to see aggressive buy orders start coming in as it rejects this zone. If there's no aggressive buy orders, we may not have enough momentum to continue to the upside. So this is something to keep an eye on. You can actually see on the right side here where we re-enter the zone, we can see a whole lot of negative orders come in. However, after that point, once price starts increasing, we then get 144 positive, which means aggressive buy orders come in and price then continues. So there we have it. That's my breakdown of footprint charts. If you have any questions at all, please drop them down in the comments section below. I would love to hear from you. If you found value in this video, click this video here. This was my previous video posted. And if you'd like to know some good book recommendations for further information on footprint charts and trading, click the subscribe button and turn your notifications on, as that will be my next video. See you in the next one.